Hi, I'm Aoife Devitt and welcome to FiftyFaces TV. We are here with our third part of the series in which we're interviewing Arun Kelshiker, an expert in the field of sustainable finance and responsible investing. As a reminder, Arun Kelshiker is former head of asset allocation and portfolio strategy at Standard Chartered Bank. He is now involved in a range of projects, including stakeholders such as EBRD and the University of Cambridge, where he focuses on issues around sustainable finance and responsible investing. He's a board member of Philanthropy Impact, as well as vice chair of CFA UK's investment committee. In this third part, we're going to touch on three areas. One is on the evolving definition of fiduciary duty and how that relates to incorporating ESG and climate-related risks. Secondly, we're going to speak about the SDGs, the UN Sustainable Development Goals, and how that is influencing investment strategy and investment decision-making. And finally, we're going to tie this to impact. We're going to speak about the systems thinking that lies at the bottom of the Sustainable Investment Goals and how it all relates to impact, but how that impact can sometimes be local and how that is defined. Welcome back, Arun. Thank you for joining us here and looking forward to this discussion.
Thank you, Aoife, and glad to be here.
Well, let's start by discussing the concept of fiduciary duty. How is this concept evolving to incorporate the very fast-changing area of sustainable finance and responsible investing, and all of these goals that we've spoken about before in terms of incorporating climate change resilience into a portfolio and thinking about elements of DEI?
So fiduciary duty has really been focused around the financial returns that investments have been generating for their beneficiaries. And so what we've seen is clearly a bit of a shift from financial returns to better outcomes. And the idea of thinking about better outcomes also incorporates other concepts which have been around over the course of the last decade or so, but also increasing in their take-up. And that's sort of focusing very much on universal ownership for institutional investors. And that's the concept where basically, because of the size of the investment that an institution is making, they're in effect buying a slice of the economy. But by buying a slice of the economy, they are also potentially exposed to systemic risks, which any economy may face. And those incorporate aspects, including things like the climate crisis. And so thinking about universal ownership, we're broadening the scope of fiduciary duty as such, and sort of thinking about more better outcomes for people and parties and beneficiaries. And investors need to sort of think about considering that as they're actually making investment decisions as of the currently. And when we think about that, we're also thinking about the interconnectedness. So the idea that we've got systems-based thinking. So the idea that events don't take place in isolation, but they have ramifications. And so systems-based thinking is also another concept which has been growing in terms of its adoption and in the way in which investors are using these concepts.
And the ultimate system, I suppose, would be the global concept of sustainable investment goals, these global goals that are many times interconnected, overlapping, but ultimately focused on goals that we would like to achieve by certain deadlines. How are investors incorporating these goals, many of which are wide and sweeping, into their investment policies today?
So SDGs, as you know, we've got the 2030 target, and current progress reports talk about us falling very short of that. And there almost seems to be a bit of a disconnect between SDGs and the way in which our investment industry is relating to ESG. And we sort of bring parallels with the idea that SDGs are very much focused on impact. We think about the idea that non-financial disclosures are very much focused on, investors discussing or reporting on their portfolios, and then sort of thinking about how companies may be incorporating ESG at the company level, thinking about the materiality both on the financial side, and also we think about concepts including double materiality. So the impact that companies have not only on their own financial statements, but also with respect to at the headline level, people and planet as well. So while our industry is focused on ESG, SDGs are really focused on impact. And so with respect to when investors think about incorporating SDGs, they generally will execute something along the lines of an SDG mapping. And that sort of, potentially the highest level would look at the revenue streams of companies that they're investing into, and then see how closely those revenue streams map against the SDGs. Some really useful tools to kind of explore when looking at that kind of approach is the World Benchmarking Alliance and their database for 2,000 companies, and the process that they use for SDG mapping, which is open source. And basically what they do is they will come up with 7 transformational drivers which they've identified that help to sort of catalyze the movement or the achievement of the SDGs. And they sort of use that as a basis for their mapping and their philosophy. And that's something that's very, that's open architecture. And it is something which is a great resource for investors to look towards and to try and explore when thinking about SDG mapping.
And I love how you've tied that to impact, because of course, impact investing is not a particularly new concept, but it's often very rarely well defined, or the definition is not shared by multiple groups of institutional investors or stakeholders. So you mentioned that SDGs do involve impact at their core, but also some impact can be much more local in scale, more visceral perhaps, in terms of local social housing or biodiversity net gain in a project that's near the investor's own domain. How would you then talk about how investors are incorporating impact into their investment decisions? What have you seen across the range of investors that you work with?
So it's good to unpack impact investing and sort of use that as a framework to see how it's currently being deployed as an investment strategy. And so we think about impact investing, we're essentially thinking about a couple of key concepts. So one is basically looking at the idea that there's intentionality. So clearly that there should be a benefit to the environment and or a benefit to society, and or both. So clearly the intentionality is something that's associated with impact investing. The other aspect of impact investing is also, the other key characteristic is this idea of impact management and impact measurement. So the idea that, within the context of an investment strategy, that impact can be effectively managed and it can be measured. And those are the 2 really key concepts, which go alongside other concepts as well, including materiality and additionality as well. So the idea that we are impact investing is providing capital to projects that may not necessarily receive that capital, and also that it is continuing to sort of make a very material difference in an area which desperately needs that, would benefit from that capital. So those are the sort of basic premises of impact investing. And then when we think about the actual funds that are flowing into impact investing, then we've seen that, recently the headlines have talked about over $1 trillion of assets have now flown into, are now sort of being funneled into impact investing to try and achieve those overall ends and aims and goals. And if we kind of marry and go full circle and marry it back to the SDGs, then we just think about some of the recent data that's been shared, and just sort of reiterating that, I guess, for impact investors, impacting along the lines of SDGs, SDG 8, decent work and economic growth, SDG 13, climate action, and SDG 5, gender equality, have actually been some of the SDGs that have received the greatest amounts of investment in recent years with respect to marrying the SDGs and impact investing.
Well, I love how you brought that full circle from a broad discussion of fiduciary duty into the global sustainable development goals back to what can be very visceral and local impact. Thank you for tying that all together for us so beautifully and coherently, and for coming here to share your insights with us.
It's been a pleasure, Ethan. Thank you very much.
I'm Ethan Devitt. Thank you for listening to 50 Faces TV. We hope you've enjoyed this special 3-part section on sustainable finance and responsible investing. You can follow all of our content on our 50 Faces Hub, where we have a range of podcasts and other content that will contain learning and role models to help you on your career journey.